Okay, class, can we continue, class?
Sir, number one, sir,
Yeah.
for the identification, number one, returns on loans is investing inflows because under the investing inflows is the receipts or interest received as returns of loans, except for the program loans.
Okay, so that's correct. But there's an alternative classification for interests. What's the alternative classification for interest aside from it being an investing inflow?
Operating in the inflows, sir,
Okay, so that's correct. But why are you sure that this is an inflow, not an outflow?
because it's a return, sir. It's a proceed,
Okay, so that's
which means
correct. It's an outflow if we're the one paying, it's an inflow if we're the one receiving. And since we're calling it as a return, that means we have made a prior investment and we are given interest as a return on our investment. Number three,
exchange of non-cash assets or liabilities for other non-cash assets or liabilities is NCA, sir, or non-cash activity.
okay, that's correct. You receive a non-cash asset, you also give up a non-cash asset. So no cash was
It's
involved in this transaction.
cash.
Number five,
Number 5, sir. Not for profits, donor restricted cash that is limited to long term purposes. Our answer is financial inflows.
okay, so this is from a financing activity and this is an inflow. So that's correct.
Number 7, payments of interest is OO operating outflows.
Alternative classification. If you're paying interest,
Financing, sir.
yeah, financing outflow. Okay, why would you pay interest? Because you owe somebody. Why did you borrow money from someone else? Because you will use that money to finance your business or your operation. So this is a financing outflow as well. But since it is interest and interest is included in the determination of your profit or loss, this can also be classified as an operating activity. But why are we sure that this is an outflow? Because we are the one paying cash. Okay, so I hope no one is having difficulty determining, distinguishing inflows from outflows. Number nine.
Is sale of plant and equipment. Our answer is investing in flow since plant and equipment is a long-term asset.
And since we're selling it, that means we are going to receive cash. That means this is an inflow.
Number 11 is conversion of debt to equity. Our answer is non-cash activities since the transaction does not involve cash inflow.
Okay, so that's correct. Number 13.
Payments due on our behalf of employees is an operating outflow because it is a transaction that enter into the determination of the company's profit or loss.
This will relate to the salaries expense. Payments for salaries would form part of your income computation and thus part of your operating activities. Number 15.
Purchase of plant and equipment is an investing outflow because it is an acquisition of a long-term asset.
Okay, correct. So I hope everyone is having an easy time already, class. If it's long-term asset, investing. If it's a long-term liability, financing. If it's an equity component, financing. If it involves current assets, current liabilities only, then operating.
17. Repayment of debt principal including capital lease obligations. It is classified as a financing outflow since it results in changes in the size composition of the borrowings of the entity. It is a it is an outflow since it involves payment of debt.
Okay, so again, payment of debt, class. If it's a long-term debt, financing. And since we're the one paying, outflow. Number 19.
Returns on equity securities, dividends. It is an operating inflow as it is included in the determination of profit or loss, and there is a cash inflow since it involves dividends received.
That's correct. But there's also an alternative classification for this one. Number 19 class would be investing class. Please don't get confused. Okay, you're thinking this is dividends, then it has something to do with equity. Class, you are the one buying the shares of another company, so that means you are the one investing. if you were the one paying dividends class, then that would be financing. But since you're the one getting dividends from the equity investments class, this would be an investing transaction. I hope you're able to notice the difference, class. If it pertains to your own shares and you will have to pay dividends, that would be financing. But if you're the one investing in another company, class, if you're the one buying shares of another company, then that means you are the investor. So if you receive dividends from such investment class, then that makes it a cash flow from investing. And I understand that this would be the tricky item in this exercise. So please remember this one, class. Okay, very few ra ang confusing items. So make sure to remember the treatment or classification of the confusing items. Please don't forget number 19.
21. Payments to suppliers for goods and services. Operating outflow, sir, because it is part of the primary operations of the entity.
Okay, that's correct. But again, obviously, this is an outflow. Okay, we are the one making the payments. 23.
23. Proceeds from issuing debt, short-term or long-term.
Financing.
Inflow,
Okay,
because it affects the non-current liability and equity of the entity.
Okay. But specifically for this number, walay equity, only liability. Okay, if it finances your business, then that would be financing. 25.
Purchase of equity instruments not held for trading of other entities, investing outflows, sir.
Okay, so number 25 is related to number 19. You purchase the shares or equity instruments of another entity. That is investing. The dividends that you would get from your investment in number 25 is your number 19. And that's why number 19 can also be classified as an investing inflow.